that you guys know exactly what's going on. So keep an eye on your email with a copy of this video, along with all of the fun stuff that we've got going on this week. And should be a wild ride. We've got the Phoenix Open here this week. We've got rain coming our way. So it should be a nice, gloomy, cool, fun week, right? And expect a boatload of traffic. And if any of you are near the 101 Loop and Frank Lloyd Wright, just stay away from there. There's construction, there's billions of people. It's crazy. All right, so let's jump right in. So we've had, last week was an eventful week. Let's just say that. So we had the Feds talking. Good old Powell came out and basically said that he's not confident in where inflation is right now. So those words, when anytime Powell says anything, it spooks the markets. And then we also had employment numbers come out, and for the month of January, the amount of jobs that were, quote, created was double of their expectations. So I know I always talk about when there's good news in the markets, it's bad news for mortgage. Well, we lost about 1/4 to 3/8 in rate in the last couple of days because of that. So when the rates went up to, when the employment jobs were double, it just spooked the markets. Then Powell spoke on Friday, that spooked the markets. And then today we're seeing a little bit of the trickle, the leftover panic kind of ensue in the bond market. So we've lost about 100 basis points in cost, in rates, in the last 48 hours of business days. So not a very good thing. I'm going to show you what that looks like real fast. I'm going to share my screen real fast. Bear with me one moment. Boom. So these 2 days, not pretty. Not pretty at all. So guess what I did on Thursday? This day right here. See this locking in update? I locked all of the loans that we currently had set up under contract of this day. That was important because otherwise we would have lost 1/4 to 3/8 in rate for our customers, and they would have been very upset because when you quote something and it ends up being different, you're the bad guy no matter what the market does. So we locked in everyone that was under contract and already set up with disclosures in our system on this date, and that saved all of our buyers. So that was a very, very good thing. However, this last couple of days, not so pretty. Give you an idea where rates are at right now. They're still good, guys, compared to October when they hit 8. But we did dabble back into the 7s again on a 30-year fix without points. But don't forget, you can get any rate you want, and seller buy downs are still working very well. And if you wanted to buy this rate down into the 5s, you can easily do that. You can do permanent buy downs. You can do temporary buy downs. You can combine the two and do what I call stacking buy downs, which is my own term that I coined, by the way. I need to patent that, or at least trademark it or something. Hold on, I guess somebody wants to jump in here. And so you can definitely do that. And real estate is still hot, guys. If you look at all of the charts across the country, real estate is still very strong. Now, the rates may be creeping up a little bit. This is temporary. Wait for the numbers to come out because the employment numbers, guys, that we're seeing, I'm going to get real with you real fast. They're a bunch of lies. And let me tell you how they work. When employment numbers come out, there's these things called seasonal adjustments. These seasonal adjustments take into the account guesses, just this crazy guesswork on, okay, it's January, so we're going to add into the algorithm it's the new year, a percentage of jobs that should be started. And that's added as truth into the employment numbers. It blows my mind. But if you look at the actual jobs numbers that when they're going to be redone next month and then the next month again, you'll see they're going to be like, oh, we recalculated the jobs for January and it wasn't the 380,000, it was actually 120,000. And if you look at the jobs lost or those that entered into the unemployment or just fell out of unemployment, they don't even consider that. So we're going to see this week a couple things coming up. On Thursday, we've got the continued jobless claims. We've got initial jobless claims, and we have treasury auctions up the wazoo this week. So we talked about treasuries and how that's how the government makes money. If they don't have their own money, so to make it, they have to sell investment tools to people like us and the big institutions that buy them, which gives the money to the government so that they can spend it. We have a 3-year treasury auction on Tuesday. We've got a 10-year treasury auction on Wednesday. And then we have a 30-year treasury bond auction on Thursday. Other than that, it's pretty light week, but we may see some heaviness in the markets because of those auctions. So I'm glad we locked in most of our people this past week, and hopefully we will get some recovery here. So Christy mentioned that there's going to be something like a little surprise or something special. So throughout the month of March, for March Madness, we are going to be waiving the fees for appraisals for all of our customers. So that should save between $500 to $750, depending on the size of the property. But you can expect a credit towards the closing costs for all of your customers on appraisals moving forward through March Madness. So I don't know if you guys have seen, but it's kind of January Madness and February Madness. It's picked up. I don't know if if it has for you, but the number of phone calls that I'm getting for people that were on the fence that are now jumping off the fence is astounding. Now, usually I get the calls at the beginning, and then they go into contract, and then escrow sees it kind of as a lagging factor. But you and I, we're the boots on the ground. We're seeing it, and it's exciting. So regardless of what's happening with rates, I think people psychologically have just swallowed the fact that rates are going to be in the 6s and 7s. And if they get better, great, they'll refinance, but they do understand they're not going to go down to 2 or 3. Now, yes, there's still opportunity to do stacking buy downs to get those now. And if you have information, or if you need information on that, I'm happy to show you. And you could still buy homes with assumable mortgages. So that's always an opportunity. So if you need help with that, let me know. But rates right now are going through a little bit of a tug of war. I've talked about this before. They get good, and then there's a bad couple days because Jerome Powell opened his mouth. I believe the Feds are most likely going to stall their cuts. We talked about potentially having the Fed funds cut on in March. I don't think that's going to happen now. I think they are very hawkish now. Hawkish means they're pessimistic. Dovish means they're optimistic. They're hawkish right now. That was the tone in the last Fed talk. And if you look at the different Fed peeps that are discussing what they're going to be voting on, I think they're all in that same camp. So hopefully we'll get them in the May. But I believe inflation is going to be down to 2.6 the next CPE, and then I think it's going to drop into the low 2s after that. So that should give the Feds the confidence they need to start cutting rates by summer. So that's my updated prediction based on what the Feds are talking. They're wishy-washy. If you heard them speak earlier in the year, they were super dovish, super excited to start cutting, and they see one jobs report that's kind of funky, and now they're going backwards. So I do know this. I know that the psychology of buyers is in a good spot. I think real estate is in a good spot. The activity out there is in a good spot. So get out there, go after all of these listings as much as you can. And let's make this year a fantastic one. I've already seen that it's picked up, and it's a lot better this time this year than it was last year as far as the mentality of buyers. So we've got a big week coming up here with the Phoenix Open, and I'm going to be in California working here. My father was taken in the hospital last week. He has some heart issues that they're dealing with. He's back home now, and but we're keeping an eye on him to make sure he's healthy and safe. So I'll be working here. If you guys need anything, I'm always available. Don't forget, I'm doing one-on-one home buyer seminars, or not seminar, one-on-one home buyer consultations. And we've had quite a few people sign up for those through my website, which is the Woolen Mortgage Team. You can go right on there and you can register for a one-on-one. And if they do that and we get the loan fully approved up front, then we do have a closing guarantee where we give the sellers a boatload of cash if we don't close on time. So if we can get the loan approved up front, we have a closing guarantee, and that's through our platinum approval, which is basically a fully underwritten, fully approved loan up front before you make the offer. And we do have a closing guarantee, which gives the sellers money if we don't close on time. So don't forget about that. It helps you and me so that we're not stressed out when the borrowers go under contract and they haven't given us tax returns, because that happens more often than you think. So we need to make sure they're getting all their stuff in. But other than that, it's going to be an eventful week here. Stay off the freeways because it's going to be a complete zoo. And you guys enjoy your week. Any questions for me as we head into the end of the week? And don't forget, guys, I am offering pickleball lessons to you and your customers. I've had a few people ask if they can have your customers, if they're coming into town and they want to learn pickleball. I'm happy to do that. As you saw, we had some highlights this weekend in the PPA tournament at Desert Ridge. I did take silver in the men's singles. That was kind of fun. So if you guys have any pickleball questions, or if you have family or friends that want to learn, I'm open to helping, guys. And it's free. It doesn't cost you anything. And I'm just happy to do that. So if you don't have any questions, let's have a great week. And let's hope that we can get a little bit of rebound. Maybe these bond auctions actually go well, and we can see some positivity from them. Other than that, all we have to really bank on is this Thursday's jobs report, the initial jobless claims. Hopefully those will come in and help our mortgage rates get a little bit better here. So any questions, I'll stay on for a little while. Otherwise, have a phenomenal week, guys. Remember, no appraisal fees through March. And enjoy your day. And we'll send a follow-up email to all of you with the announcements with all those dates as well. So enjoy your day, guys. Have a great one, and we will talk to you soon.